learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it. Working to the cover.
So you want to learn how to trade options, or you are already an options trader. Either way, we need to talk about this number one thing that I just invented. So what's going on, ladies and gentlemen? I hope you're having a wonderful day. The market is closed tomorrow, and I don't know if we are going to be streaming tomorrow. I might, so make sure you guys are subscribed. Second link in the description, or first link in the description, youtube.com/thestockmarket. We're live Monday through Friday, 30 minutes before open. But hopefully we see you there regardless. So I wanted to give you guys this to meditate on and give you something that could help both options traders and even anybody investing or learning how to invest or already experienced. This is the principle I want to share, and it's a principle that can be applied in any market. However, it is going to be very, very even specific to what is going on right now. And I was thinking about this, and I want to open up the discussion for this and share this with you guys, hopefully to help you. And then also, I want to hear your feedback. I want to know what you guys think. Let me know where we're at on this, because this is something I'm contemplating, or really more or less you are going to see me. This is something I've always done, and now I've just found a way to really apply it to a direct strategy. Pretty much moving forward with options in this volatile market, with how the economy is, everything going on, I'm pretty much considering toning down a lot of certain trades. So like I'm saying, you're going to see me incorporate this. You've already seen, I haven't really even traded that much this week. We're coming off of a very, very big gain, still like around 200,000 since March. It was absolutely insane. We gave back profits. I think I'm still sitting at like 150, 160. So we've given back at least 40 or 50 grand of that. The plays are still on the table. They still have a lot of time, but now it's saying, how do we protect ourselves here, but also how do we leverage this the most advantageous way? And now, before I say in that, you see the disclaimer, option traders should make those almost on purpose only. But this strategy and what I'm looking at moving forward, it is going to require a long-term investment account on the back end. You know, this is part of the strategy to bring it full circle, because without the long term now, because if I'm saying I'm kind of want to pull back and you know, be a lot more selective with what I want to play, and you guys will find out why. The real key is making sure that we always win, that we never miss out, and that's why regardless of what happens, if, you know, we're in put positions or kind of these positions that aren't necessarily puts against the market, but they're going to require volatility or if just things escalate. But at the same time, this is a very, very good opportunity to take advantage of the market. We know what the market offers in the long term. So, and that is part of, you know, always in the back of my mind, you have to understand, I already have a very, very good base with my long term. I've been investing for 13, 14 years at this point. So I'm in a much different position. However, you should use this as an inflection point. You could say you started in the 20s if you really think about it, because now for some of you with stocks coming down, if we do come down, depending on however this plays out, you have a real good opportunity to start setting up. So the whole idea here is that regardless, we're catching a ride with the market, the Fed, and all that. We're going to talk monetary policy and all that. So that is the intro. We got that out the way. Drop your thumbs up on the video. Make sure you're subscribed. You know, we already said the stream stuff. So let's break this down here. Oh, and I even forgot. And as part of this, well, one part of this is going to be with interpretation and news. But here, let me share this with you first. Pretty much this is the number one thing that we need to cover, and it's simply, this is the philosophy. I feel like, I don't know, hopefully I didn't hype this up too much. I think this is going to be my Warren Buffett quote that you will, you know, they say, be fearful when others are greedy, you know, buy when there's blood in the streets. Greed is good. I feel like this is a tagline that, and again, I think this is just universal to help when it comes to options and even understand plays and motions, both the psychology and prices. But when they act fast, you act slow. When they act slow, that's when you act fast. So I don't know. Maybe you let me know what you think about that. But I'm going to explain it here for you. And part of this is understanding, you know, what certain scenarios, you know, especially, you know, with option prices, you guys have seen this a lot. And it's understanding, like when you see a pop in option prices, how do you get the option that was cheap? How do you make sure you're not paying too much for it? And it's letting the prices kind of speak to you to understand this philosophy. But then also now, the main thought I'm having around here is monetary policy. So essentially, the conclusion that I'm coming to is that I need to hit the brakes right now. So essentially, what I'm saying right now with the market and even monetary policy and what's happening, if you think about it, look at the Fed. And this is what I'm saying with why this makes sense. What I'm saying, understand the global politics around you and how this is going to affect investments. When you see people act fast, you want to act slow in a sense, because if they're changing something really, really fast, the government is usually really, really slow. The Fed is usually really, really slow. We've seen markets move at a faster pace than we've ever seen in history. However, now you're also seeing the government and the Fed take actions faster than they ever have. So when I'm putting this into context, that's why I'm saying, well, maybe I want to kind of slow down. I need to slow down on my trading. But also, I mean, it's part of the strategy. Pretty much I'm saying slow down now so that we could really strike at the right time, because when they act fast, you're seeing it, and you're seeing it in the stock market now. The stock market is going up, and think about it. They're acting fast. A lot of things are moving fast. Even the market is a response to that. That's why you'll get blown away on puts if you're at the bottom. But now, even then, the broader scope of this is even understanding this related to news and even interpretation and earnings in individual plays. It's the same thing. If you see premiums, when people are acting fast and it's moving really fast, that's when you want to act slow. However, now the second part of this is that when they act slow, you are supposed to act fast. So when you have confirmation of the news and you've interpreted it and you know what's happening or the situation or spreads and events, and you have somewhat level of confirmation and it's not always reflected, then that is when you want to act fast. And even relating this to, again, we're coming off of $200,000 in profits from this whole historical market drop with everything with the virus. But this has a point. We played TLT, we played IWMs, the EEMs. We had a lot of different plays, but think about it. We were grabbing our plays all through January when this stuff started happening. We got the TLTs February, and you could even see it in the chart. This was one of those moments when they act slow, you act fast. You saw governments, you saw people, it was just this, it's just that. And again, you couldn't have forecasted this, and that is what made it risky in the sense, because you could also argue that people were acting too fast and going crazy over the virus when it really wasn't that big of a deal. So this is why this is a very paradoxical statement, but hopefully you see where I'm coming from. And that's why I'm saying I do kind of pin it more upon the monetary policy and actions like that. However, you could really see it, and now what's happening, we acted fast, they acted slow. We got a really crazy premiums. That option play, you could watch the TLT video, $500 in a 50,000. We had several plays. One play was 1,000 to 80 grand. It was nuts. But the market started moving fast. But then what started to happen? They acted fast. And then we started acting slow, but we kind of held our plays. But, remember after they cut rates and all that, we got the profit off a lot of this stuff in the middle of it. But then eventually we took a lot of profits and slowed down. But then as things were escalating, they started to act fast. And that's what we're seeing now. You're seeing the market coming up. This looks like a reaction. They hit the gas. They said, we have to do something. Something's wrong. We have to do something quick. They're doing it so quick. They're passing bills in record time. They're not reading this. And the point is, this isn't just now. This has happened in history. So I believe this statement holds some validity to that, is that you could see this all throughout history, is that when you do see people act fast, extremely fast, and that is given usually because of what is causing them. There's a catalyst, the implied volatility. IV is a result, not a cause. IV is a result, not a cause. IV is a result, not a cause. Something caused, them to act fast. However, in those moments now, that is when you want to be cautious. And that is what I'm saying here now, is that with all of this monetary policy, I'm going to use this strategy now to move forward. And I'm thinking I need to really, really put an emphasis on slowing down the trades that I'm making, because if the market's moving fast, they're pumping all this money in at full speed, they're doing a lot of stuff, you now do not want to act quickly, because that means they're acting fast or things are changing fast. You're going to be really, really prone to mistakes and errors and losing money. We now need to wait till certain things change, or we could interpret it or otherwise that they are acting slow, and then we are able to act fast. And some people would argue that that could be the case right now, and maybe that could. And this is what we need to figure out, and this is how I'm trying to use this. However, this is going to teach us how to swing these options accordingly into this market. And pretty much I'm saying this, I see this as a cruise ship. It reminds me of a cruise ship, and I'm saying we're on board right now. I'm kind of seeing what's happening. You're seeing the Fed, and I'm going to use a bunch of intermixed analogies here, but with that cruise ship, I'm feeling like, it's the boat crash and everything we're coming into. It's going to happen slow. The economy's slow. It's moving slow. They're reacting fast. I kind of want to wait now, because I don't know if this is it. I think if we do have to wait a little bit more, or if this is the bottom, who knows? Again, the fact is we really cannot understand what's going to happen here. It's really unprecedented. I'm saying I'm going to hit the brakes until it really becomes just as obvious as last time with what just happened here, and people were acting really, really slow. Then we will act fast. But now with them moving fast, it's messing up the markets, the prices, all this. We need to I just want to hit the lever. I'm throwing down the anchor, but the difference is we're not as big as a cruise ship, and that is the advantage you have when you are not extremely leveraged, when you are not a big bank, when you are not some of these bigger investors. You have the ability to stop, and it's not going to cost you as much. Now, you will miss out on opportunity costs, and there is a problem if you do miss out some of the biggest days, or if things don't play out simply how you expect. That's why everything is underlined, and the linchpin of all of this is having a long-term portfolio. That is our essential option on this whole strategy and trade. Anything falls through, you're taken care of on the upside with the stocks, or even if they do drop, we should find the next opportunity in there, or we will profit off of it. But essentially now on this cruise ship, this is what the cult feels like. We're all on this now, and you're seeing, and what makes me reminded, it's like the virus and everything going on. But now think about people's attitudes. Towards the virus. However, now in this situation with so much stuff going on, and things are moving fast, and people think, oh, this is historic and this and that, and you saw how this whole situation developed. There's a virus on board, and it's FOMO. And FOMO is going to get some people, and that's what I'm saying. I'm saying literally, I want to hit the lever. I just want to stop. I'm not saying stop trading, but I'm saying in a sense, I want to literally just totally drastically, just as to the equivalency of how fast they are moving, I want to go to equivalency in the opposite direction. Essentially is what I'm saying. If something is going to pull you, I want to pull it just as hard in the other direction now. And what's going to happen is FOMO. That will spread. If we're all saying this, it's difficult. And this is what separates good traders from bad traders, option traders who are able to do this for a living or not. It is the ability to just come out winning, and usually over trading will eventually kill you. That is why I swing trade versus day trade the options. So don't let the FOMO get you, and pretty much others of you are going to be immune on board, and then some of you just haven't got it yet. You could withhold. You may not have the FOMO yet. You're just showing no symptoms, and that could end up being really, really good or bad, or even devastating, because now if you haven't got the FOMO yet, and you don't understand what I'm saying, and you haven't realized, yeah, I'm immune. I get it. You've been there. You've already lost enough money to learn from your FOMO. You've already been on one of these bad cruises. You got that immunity, but if you don't understand it yet, or maybe you're holding out, it's good, because if you never get the FOMO, that's awesome. You're going to be able to do very, very well. It'll be easy. It understands. You have the patience. You'll be able to execute this perfectly. However, if you don't have the FOMO now, but then as the market starts moving fast, when the market moves fast and these big changes happen, it's going to leave you with FOMO. So if it hits you and it hits you later on, that could end up being devastating too. You could get caught up in FOMO. I don't know what FOMO does. I just know the result is bad. But essentially now the question is, how do you know when to go then? How do you know when to act fast? Because essentially there's two parts to this. One, we are saying we need to act slow, and that people don't like that. You don't like that. Most people want to do something rather than stop something. So the first step is stopping, and the first step is, or again, counter force backwards, selectivity of plays, really, really taking huge control. One, the balance is important. That was the first step, but now the next step is volume, balance and volume. And now we need to just turn the volume down just as much as they want to turn the volume up. Now everybody wants to know, when do I act? When do I strike? It doesn't matter if you do the slow part good. How do we make the money? How do we hit it? And this is what we need. It's confirmation. And now this is confirmation with news, with what's happening with the virus, the economics, in this case with monetary policy. It's going to be policy. And then also, though, things will be reflected in price or the situation. Confirmation could be stuff that will have an effect. Like you guys have seen the Nigerian currency stuff, when the emergency rate cuts, those are strong levels of confirmation. But even like earnings is a confirmation of some sort. You don't know what's going to happen before. However, you do know when there will be a specific event. The dates of the Fed. Those are little areas of confirmation, but they have different values or weights, I would say, and that's hard to even grade them. But the better, the more experience you'll see, it's just easy. The best time to really know when to act is when it's a bigger one. Again, emergency rate cuts, when people start making changes they haven't done 20, 30 years, stuff you've seen adapt that hasn't been adapted. Those are the easy ones. And those ones, usually you could just follow the easy ones. Again, even just follow the Fed and just simply trade around the Fed. If you simply traded the last TLT plays we've made in the last 8 months, you could have made over 150, if not, again, to even $1 million or even 20,000, whatever, depending on how much you put in. But that's just off of 2 plays and literally 2 events that you know exactly what date it's going to happen or what week and everything like that. So that's why I'm saying if you don't burn any money on the trades, yes, in that, again, there's opportunity costs. You don't want to lose out on stuff. But if you're able to strike and really now increase the odds, what you're returning, but because of the volume and just going for the low-hanging fruit, that's what you wait for, and that's when you act fast. And, an example of this, you guys have seen this, think of popping option prices. Prices are going to move quickly. What do? You see the huge run-up. News comes out now. So let's say you see that. We've seen that happen before. And this is typically what happens. It'll either be a rumor or it will be actual news. And that is what confirmation is letting you know. And when you could really understand the effect. I should have done this on UNH the other day. If you guys saw that play, I missed it. It was 1,000%er, but prices weren't moving quickly. But we knew the news. I had confirmation of the news and what it would do. I've only seen that happen, with Bernie dropping out. We could assume so much. We've only seen it happen once, but I knew it would have some bullish effect. I even said it, but it was going slow. So people were reacting pretty slow to that. And I had time to look at the option. I was like, I had time to think about it. I had time to tell everybody I should have acted fast. Now look at the reverse now. You've seen Tiffany's. You've seen other plays where news comes out and it's not confirmed, or what happens is that people get an idea or a piece of news drops, but it's either a rumor, expectation, or whatever. The prices jump up and even the market makers act accordingly. What do? They move quickly too. The prices are moving up, but you don't really know the news or you don't know if it has weight. That's when you want to act slow. You see option prices move slow off of a news drop. You want to act fast. But if you see them now start to shoot up a ton and you don't know the weight yet then you want to act slower, wait till it pops, comes down, and do your thing from there. Or now, let's say you see the prices move quickly, you want to go slower in the most crazy way. Or in general, if you know the news has weight and you see the prices moving, go to the July contracts, go to the longer dated contracts that won't move as much, or you go and think snaking the chain. When they act quickly, you act slowly, or now when they act slow, you act fast. That's what snaking the chain literally is. It's seeing stuff move fast. So if I see, even though the prices move quickly and I see an opportunity and one of them doesn't, I act fast, I snake the chain, I take it. But now it's even interpreting and understanding the broader scope. But that's when you want to act fast. Essentially, what I'm boiling this down to is fight fire with water. If you're ahead, we hit those first plays, we got ahead. Now things got so bad in the market. Now the heat is getting turned up, the monetary policy. That's what I'm saying with day. When you're seeing what's happening in the investment world, the economy, they're turning up the heat. When you see that now, however you're playing it, it's just pivot back, because this, I feel like, still applies even if you are on the bullish side or the bearish side. It doesn't matter which way you look at it. It's pretty much the same thing. But what I'm saying is I'm going to pivot back. I'm not going to play that game because I can't go that fast. You're seeing what happens when you try to go that fast. The options get crazy. It's more volatile, easier to lose. You don't want to go fast. You can't play that game. You're not good at it. Not as good as they are, especially when in the bigger and faster they go. You don't want to get in a game of being ahead and then playing their game that's slowly just chopping you back. So what I'm going to do instead is just go the complete opposite direction. I'm going to run away, essentially. It's if you take something hot to cold or cold to hot, that's how you make something crack. I'm trying to crack this. I'm trying to not let it get to be on here. So what I'm trying to do is do the opposite. So if it starts moving fast, the markets move fast, premiums are getting high, volatility is increasing now, or even, again, the policy, I want to scale it back, and then vice versa. But understand the scope of things so you could recognize the response. Understand the type of, what are you dealing with? Is it monetary policy? Is it an individual stock? What kind of news? How are you reacting? And that will let you know, is this something that you do turn back? In this case, I'm pretty much saying, risk opportunity cost for real cost to then now wait at the right moment with all of the money that we were able to get, and now really just a really, really slow, crazy parlay, essentially, is what I'm getting at. But you guys see, understanding the scope and interpretation of something to let you know, and being aware of even both the psychology and all that, But in this case now, even prices, prices communicate with you. If they move fast, your job is to translate what the price is saying. For news, that's where you interpret. It's all communication. And that's what you have to start understanding here. This is what I'm saying with the Options 101. But if you don't know anything, this is why I'm saying it's a very thing. Or even if you're advanced, you're seeing how this is an advanced strategy, but it's also very, very simple and could get you right off the ground because you could see what happens with prices. If prices are moving fast, you act slow. If something happened to the stock and things are moving slow, you act fast. Now be careful, because sometimes when prices move slow at the same time, it's because nothing's happening. No one's reacting. So it's a very fine line, and that is the delicacy and difficulty of the market in trading. However, just keep this in mind, and as you get experience, you paper trade, or as you've already have the experience, this should make more sense. Once you start learning what to avoid in the opposite ends, you'll be good. But either way, it's communication, and know what holds weight and what doesn't. I'm supposed to say so, but it's so you could compare and understand if things are moving fast and slow. Because now the more you know what has weight, the more you know these situations, you'll be able to say, okay, well, that's a non-event, or no. People are moving slow. People are moving fast. Think TLT in the bonds. We knew that one every time. We know that for certain with the Fed and everything. Every time the Fed, I mean, it's a broader global macro effect, but we know what's going to happen, or we usually had some level of idea. The weight, that type of news, but then you also know stock drops, and then news drops, and it's some who knows what type of news, and then the stock doesn't really move, the prices aren't moving. You've learned that means really there's no demand anywhere. So know the weight so you could understand and compare if things are moving fast and slow. But simple as this, I'm going to leave you with this, my friends. This is the phrase, whatever you want to call it. This is the main point. When they act fast, you act slow. When they act slow, you act fast. So I don't know. Maybe I think I could have overhyped it, but I like it. Keep this principle in mind, navigating this current market and even a normal market. I think it applies to everything. So I like it. I want to see this. And that being said, now back to the conclusion, you let me know. What do you think? I want to start focusing on a different set of plays. And even though we like the 1 for 5, I want to tone it down a little bit. And hopefully you see why, or until I could see, maybe this very well could be, maybe we've already kind of toned it down. I don't know. We have acted slow for the month, or we have to see. And that's why I want to let it throw it at me. And that's why I think it'll become very, very obvious. And my plan is to hit the big one. I want to hit either the bottom and we're going to get really, really cash out, or I want to hit the top if we already haven't got it. So that is pretty much it. I'm going to leave you with that. I love you. Let me know what you think. I'll see you in the morning tomorrow, or I will see you tomorrow. Meditate on this. Holler at me. Let me know what you think. God bless you. Enjoy your weekend. Good Friday. God is good. And you have a wonderful day. Peace.